Hey guys, welcome to Wednesday, the Day Traders versus midweek outlook for February 18th, 2026. We had a nice week so far. We sold off for most of the week on the indices. We did get a pop back up, but we're kind of like a little rangy right now. We had FOMC, we had that come out today, and surprisingly, we had probably didn't get what they were expecting. So the market reacted to it, and we will definitely go over that here. Let's go ahead and get started on that. So let's go ahead and switch screens. How's everybody doing tonight? How is everybody
All
doing?
good. How are you? Congratulations. Many
Oh, thank you.
congratulations.
Thank you.
Mhm.
Hi everybody, how's everybody doing? Like,
Good, good. What's going on, YG? You trade this week?
oh yeah, everything been good this week so far. Paper trade. I just really did something today on S&P.
Uh-huh.
It hit my point. I gave about a couple of thousand on that, but
Okay.
everything been good though. I just been
How are
following.
you looking at the market right now? Like what exactly are you doing to like determine like what's making you choose your trades?
I've been just working the fair value out, and I've been following along with you, and
Okay.
that's all I've been studying the fair value gaps right now.
Okay. Okay. Can y'all see
mm.
my screen yet?
Huh?
Can y'all see my screen?
Yeah.
Yeah.
Okay, not the right screen. Um, y'all, this computer can't come fast enough. This thing can't come fast enough, man. How about you, Anna? How did you do this week so far?
Yesterday it was good, but today I did. I lose one trade. I took one at approximately 7:59, 8 o'clock. So
Uh-huh.
I took buy, but actually I didn't pay that attention. Like today there was one news right at 8:30.
Uh-huh.
So and that day I was asking to you, right, how to filter that news in Forex Factory, and so I
Uh-huh.
left that red only. So that folder was orange, and it didn't show me. So I
What was it they caught you?
sell means I was in buy, and 8:30 after 8:30 it was sale, right?
Uh-huh. Uh-huh.
So that sale, and it exactly hit my just stop loss, and after that it hit my target.
Oh, okay. Okay.
So
Can
but
y'all
that
bring
was
that?
my apex. So I was like 5 lot. So
Okay.
yeah, it was almost 1,050 loss.
That's okay. That's still
Yeah, yeah, that's okay. But the thing was that like today, like whatever I predicted yesterday night, I made that and everything happened. And
hmm
when I came, I thought, okay, this is going to retrace till London FVG, and from there I will buy. And I
Yeah.
did that. And
Yeah.
after that, it just moved lower till lower London FVG,
Uh-huh.
and I got in that. And after that, I left that because today was FOMC also, right? So
Yeah.
I thought not to do that. Otherwise, definitely because I lost that, so I'll do that revenge trade. But yeah,
FO.
it was good buy also.
Yeah, that I took the buy on today's setup.
I saw that.
Um,
That time I was regretting, like, means it was good buy. Mine was also good buy, but thing was just a hit stop loss. So it's
yeah,
okay. Yeah.
no problem.
Mm-hmm.
Okay, so one thing I wanted to talk to you guys about, God, could just yeah, I don't understand how I could throw this computer out the window right now. One thing I wanted to talk to y'all about is why I hadn't been looking at options a lot. And this article came out today that kind of lines up with my thought process on this, like referring to Bank of America clients are running from single stocks. And right now, the single stock picks are kind of weak right now, and it's not you're not seeing a lot of certainty in the moves, like even I think the last stock that I looked at for options play
If you
was
don't
the
mind, like what is exactly a single stock?
again, it's a single company, just looking at buying a single stock
Okay.
option or buying the stock itself.
Okay.
So, I think that a lot of people are offloading right now. You can see, according to Hall, selling was driven by institutional clients, right? Biggest outflow since early January, and the second largest outflow ever, driven by single stock selling, right? Meanwhile, hedge funds clients were net buyers for the eighth time in the past 9 weeks, and private clients were buyers for the sixth straight week. So when you hear stuff like that, it kind of leads you to believe that, you know, um, we're seeing a lot of people profit take right now. Usually, to add on to what's going on with, we got pretty much economic uncertainty right now. Individual companies are trying to scale down their in a lot of ways by not spending as much money, shifting towards AI, and reducing their numbers as far as full-time employees versus contractors, increasing the number of contractors, and they're beating profit targets and whatnot, but a lot of the guidance isn't very great late, especially with your um companies that are not like in the Mag 7 companies, or not, they're not driving or super scaling companies. Like, you're not seeing a lot of it, a lot of the inflow, right, of money going into single stocks, and instead going into like S&P, going into NAS, going into gold, shifting into those more safer, traditionally options to go into the market. So I just wanted to point that out to you guys. I'll send you the link to this if you want. I'll send you guys the link to it. And so now we can look at Forex Factory. Today we had 8:30 news, durable goods around 8:30, which was that stood out, but it didn't really move the market a lot. And we also had housing starts as well, and then we had a couple of other yellow folders, but nothing too crazy on the moves today. We can go over the trade that I took today, real quick before we go any further. Um, Let me pull that over here. The trade I took today was a buy off of these lows after we swept. Um, it was almost 6 to 1 on the trade. This was a trade that was a VIX inverse correlation trade. We had the low we made here on ES. Same time we were making this high. We failed to take out the high. This was the 930 gap on the 5 minute. We gapped down through it, traded back up, and then we failed. So as we gapped through that, we traded back down here, and then we pushed up from there. So at the same time, this was pushing up on this candle, the 945 candle. We were pushing up on VIX, we were pushing down on ES, and then followed through with the rejection of this gap to go lower, and then we start taking out lows. At the same time, we start taking out highs, and eventually We set the high day at 69.25.75. I scaled out of the trade throughout different points. I took some around this high, took some off around this high. I take that back. I took the first partials off here, right around 68.90.25, which was around the high a day at the time, the London high as well. I took 6 off here around 698, around 698. So right around here. So 690 and 698 on that candle right here. And then I took the last couple off around 69.10. Still, I left about 10 points on this, but that's okay because I was finishing out another account, another couple of accounts. So today, I end up finishing 3 more $300,000 accounts. And I got one more that I'm almost done with. So that'll be the next thing that I work on, right? As far as earnings, let me just double check. I'm gonna check for my phone on this one. I'm not gonna go into bring it up unless I see something. Let me see. Let's see. Let's see. Hang on 1 second. So we got earnings, Whisper. Okay, tomorrow we do have Walmart, Opendoor, Wayfair, Klarna, and then Friday, nothing too big, but look out for Walmart tomorrow, Opendoor, and Walmart's reporting before the market opens, and Wayfair is as well. Texas, Roadhouse, Sprouts, Live Nation, a couple familiar names, but again, nothing that I would be interested in to take any option plays on. And then as far as the rest of the economic calendar, we got unemployment claims tomorrow at 8:30. Right now, they're expecting 223,000. And we got Philly Fed Index, and then we got pending home sales. Now, last week we had housing numbers that come out last week. Normally they don't affect us, but that kind of had a push uh in relation to the housing numbers from last week. So it comes out at 10 a.m. I keep an eye on this. If you are not in a trade, by the time this news comes out, I would keep an eye on that. As far as the FOMC meeting notes, one of the big things that came out on that was that the probability of the market getting another rate decrease is just kind of lowered. So let's look at what the Fed rate. Let's look at our website. Let's see. The watch tool. Let's see what it is now after the FOMC meetings. Essentially, they were pretty much kind of sold on the idea that they will probably be leaving the rate at the same, which is 3.75. So this is 94% chance that we be leaving the rate at the same. And they were basically in almost pretty much saying that the tariffs, they're seeing the employment numbers they want to see. They're seeing the numbers that they want to see as far as CPI, PPI, which have slowed down. And the last thing that they're probably gonna be looking at is PCE, which comes out Friday. So right now you can see we had 94%, 94.1% that we stay the same for the current rate. So keep an eye out on that going forward. So we got on Friday, that's going to be the next big thing. We got GDP coming out at 8:30 and PCE. This is what they really use to measure inflation and determining whether or not they're going to be raising or lowering the interest rate. So watch out for this number. They're expecting 0.3%. They're expecting 3% on GDP. At GDP, advanced GDP, they're expecting 2.9. The other thing we want to look at is PMI. PMI they're expecting it to come in at 52.4 and 53.0 on flash PMI. Manufacturing PMI is 52. New home sales at 10. And they are looking at a number of 732,000. November data for new home sales, which is late and delayed. It was because of the government shutdown, in which we're now in a partial government shutdown. This supposedly is only affecting essential workers, but like TSA is still being affected, ICE is still being affected. A couple of other groups are still being affected where they're either on furlough right now or they're working and just not getting paid right now. So
Let me interject on that. ICE is not being affected. ICE is still
they're
fully
not.
funded. Yeah, ICE
Okay.
is still fully funded. Yeah.
So they considering them emergency for no reason.
Yeah. Well, they had already initiated that with the Big Beautiful Bill Act. The ICE was going to continue to be funded throughout government shutdowns. Anybody who was armed enforcement will not be affected by any government shutdowns. So
Yes.
I don't.
Crazy.
Anyway,
Crazy.
yeah,
That's why I'm on you, cuz that's why I'm on you. Now you see why I'm
yeah,
on you.
exactly. You know what I'm
Cause
saying?
you up there at TSA working for free, man. Like we can't
And
do this no more.
trust me, I'll be sitting around. I'll be ready to draw the clown face on my face every time I look in the mirror.
Nah, man, we gotta get you out of there, man. So
Absolutely.
let's go ahead and start looking at the charts. We got dollar. Here was our setup for the week on dollar. We already hit our 5 on this. And we kind of just went straight up on dollar with no real retracements. We got one around the low of the fair value gap, but you can see this down series of candle. There's going to be an order block right near the low. So that's going to project us, probably lead us higher on dollar. So now going into the rest of the week and into probably now into the end of the week at least, we go ahead and push up through these highs. This is a previous week high. There's a little small week high right here. And then we get into and maybe above the yearly opening price right here at 98.32. Our one should take us at least above one of these highs. Our pullback should pull back to the midpoint at the midpoint at the 1 to 2 move, or even the 3-4 move to the downside if we get the 2-3 to the upside. And then after that, we should see price just go ahead and push us up above into the high of this daily fair value gap. Probable areas for retracement are going to be the main one I would look for is the 3 or the 5. We could possibly get one from the 1 as well, but the main ones I would look at for our highest probability are our 1 and our 5. I mean 3 and our 5. The move to the downside, let's see, we have price hanging out in between the lower quadrant right now. There's a little small order block. Let's say we get our one down to tap at least into here. If we do start to sell off, there should be an order block or a fair value gap or something in between this move, the 0 to 1. We'll say that our 2 holds up around there somewhere. And then worst case scenario, our 2-3 move brings us down near the low of this fair value gap. And then we come back down for the 4 somewhere inside of this range. And then our 5 gets us basically back down to the monthly or into this inverted fair value gap right here. And that'll be what I would look out at least to close out the week on dollar. Then if we do get a bounce, maybe we get a bounce at the 3 on this 3-4 move, because we'll be at that point retesting the low of the fair value gap. And you can see this candle right here. This is going to be a fair order block. And this order block is going to probably hold us up inside of this daily fair value gap. So if we get inside of here and we can't get below this low right here, that's probably going to hold most of the price up right around 97,335. That makes sense?
Yeah.
Okay.
Mm-hmm.
Drop this chart. I'm going to just open it up in a new tab for myself to drop later. And then we can drop this in the chat. What do y'all do with these charts? Do y'all keep them or what do y'all do with them?
It's still in my tabs.
Still in your tab?
Yeah. Sometime I take printout also, whatever is important one.
Okay.
But
Oh
NAM
yeah, I
and
use them.
MAS only. Sorry.
Okay.
No, I said I use them every day.
Okay. Okay. All right. Let's look at gold. Gold still ranging. So you can see, right? We had our daily high from Monday was over here. Let's expand this out. This is the high of the week so far. So 353. This is the high of the week so far. So this is going to stay important. Then this is last week's high. We haven't traded anywhere near that yet. We've gone to the downside. We've taken our downside move. So remember, okay, here's our 0 to 1. Our 0 to 1 set the low here, and we ended up kind of pulling back into this 1 hour fair value gap, this bearish fair value gap, and then we sold off. So we sold off back once we got in back inside of here. Then we took the low. Then, like, our 1-2 didn't really come until we got here. We tried to bounce, we failed, and it continued to go lower. So you can look at this a couple ways. This 0 to 1 move right here, this gave us the 0 to 1. We just didn't reach our extreme. We like plus or minus 10 points or so. Let's see how far we are off. So this was about 20 points, about 30 points off from here. That's okay. This move that we pushed up looks like our 1-2 retracement, and then our 2-3 is this whole move down pretty much, where we missed making that by about 10. Let's see, the low here is 74, where we projected. It's about 30 points too. So that's okay. Overall, the concept is once we get our sell-off from our 2, if we sell off from 2, we would take out this low, the low we created, which was here, first low, the low we created here, then this low, then we would come and try to take out this low. And worst case scenario, we push 3 down there to monthly. We almost got it, right? This bounce, you could consider our 3-4, that the 3-4 and the 3-4 would fail once we trade through this 4-hour fair value gap, and then we would get failure inside of there. That's where this move is coming from, right? And then, just like I always say, if we're gonna bounce, it's gonna happen at the 3-4, 1-2, or the 5. We got the bounce at the 3-4, where this move right here is our 3-4 bounce. And instead of us just bouncing and selling off, we started to bounce and then climb higher, right? So that's the gist of what's been going on, right? So now let's take a look at where else we need to be expecting. So this fair value gap from the 1 hour is overlapping the daily. So we still need this because we sold off from it and we're using it, right? So at this point, it's still bearish, but because we trading back into it, we could look at this as it may want to bounce again and trade through it if it's going to go up. So that's what we want to look out for. Are we going to go up and continue higher? Because if we are, it's going to need to use that. It's going to need to use that fair value gap right here and invert it, just like it's doing right here, right? It didn't invert it, but it's using it to push higher, right? So that's where we're going to need to look out for. This is right now the low of the week so far. Low of the week. This is our weekly low. We gotta see this. This will be a fair value gap, just like these are as well. I'm not gonna draw them, but they will likely use these if we're gonna stay high. If we're gonna continue higher, this is a liquidity that we'll need to sweep right here. This is the sell side liquidity on the last swing. So if we start to fail and go lower, we'll definitely be looking at that as target. And so keep an eye out on that. So if we sell off lower, and we can't take that low out, right? This low, for right now, since we're pushing higher, I want to say we stay inside of this. But if we do take this out, then we should go lower, right? There should be another fair value gap inside of here. And worst case scenario, if we get this 1-2 retracement, it tries to fail right around this 5,003.9 area. Then our 2-3 move will cleanly try to come down back in here. I think we'll try to fail or hold this daily fair value gap low. So we hold around 4905.1, and then we retrace in here. And then if we get a 3-4 retracement, again, this could still take us higher, or we could fail at the 4 and come down to challenge the monthly one more time, the monthly opening price. So that's what I'm looking at. Downside, high probability areas to bounce is going to be the 3 and the 5 for sure. That makes sense?
Yeah.
Tracking?
Yeah. Tracking.
Right, that's the downside story. Then our upside story is going to look a little similar still expecting our same targets up here, this 4 hour. Just gonna climb up there a different way. But I'm still looking at that as our target. Let me just pull this out a little more. You can see we got our weekly high so far. If we do push down, push up for a 0 to 1 move, I think we get our high at or above the weekly high. And then we try to invert this fair value gap on the 1 hour. And that's what we'll use to go higher. Our 3-4 fails again along or at the high of the previous week. And then the 3-4 retracement uses this weekly fair value, this 1 hour fair value gap to get us higher. I still think the 4-5 pushes up higher at or near this 4 hour fair value gap to set the high of what we think the range will be, and we reject at the 5 or we reject at the 3. So those are the probable areas of rejection on this setup if we do get this. Either way, that still puts us in the middle of this gap of price where we got even price, but you see we got an order block right here, a little one right here that could stall us out, which is the reason why I'm looking at the 5 coming in over there. Cool beans?
Yeah.
We still may use this 4 hour fair value gap. So that's why we're still going to leave it. And you can notice, right? We got a 4 hour bullish fair value gap right here and a 1 hour fair value gap right above us. This 4 hour is by the low of the fair value gap. This bearish 1 hour fair value gap is near the midpoint. So it's like there's a lot of resistance here. There's a lot of support here. Which one is going to win? Right now, we just stuck in between the two. We sold off from this one. We held at this one. Now we pushed up back to this one. And now we're trying to fail it right now. So it's just in this range for overall price of gold right now. So, and a lot of companies are restricting gold trades right now and all the metals right now. So if you're seeing some issues with your broker and you're like, hey, why can't I trade this? A lot of them are restricting it so that you can't trade it because it's being real volatile lately.
And so what that mean? They cut you off from making your money because it's volatile. We got to do with that.
They will limit the size you can put down on it, or they will just tell you can't trade it at all right now. And it just
That
depends.
sucks.
Yeah,
That
but
really, really sucks.
it sucks, but you just gotta trade something else, that's all.
Yeah, I feel
That's why you gotta have your 1 and your 2. My 1 is S&P. That's what I'm gonna look for most of my trades on. My 2 is NASDAQ. If I don't see it on either one of those, then I'm gonna go to Dow. If I don't see it on Dow, then I'm gonna go to gold. And that's the order of everything that I'm doing most of the time. Like that's how I go through everything, right? I'm gonna look for Dow. I'm gonna look for S&P first. Then I'm gonna look for NASDAQ. Then I'm gonna look for Dow in that order. And if I can't find a trade on neither one of them that I like, I don't trade. I'm just not supposed to trade that day. And really, if I don't see it on NAS or a lot of times if I don't see it on NAS or S&P, I probably just won't even trade as well. Because if I'm looking at NAS and S&P, The move that I would probably want to take on any of the other pairs has probably already happened because the timing is usually similar as to when you want to take those trades, right? So I might have been looking at S&P, waiting for S&P to give me what I was looking for, and I would have missed whatever Dow was going to do because I was waiting on Dow to set up. I mean S&P to set up or NAS to set up if I'm looking at NAS, right? So right now, this is our low for the week on VIX. We got nice little lower time frame equal lows on this. VIX, man, I love trading VIX now and watching the correlation between VIX. We got some liquidity build up right here. This is our along with our high day. So if we do buy push up on VIX, we can definitely see that price should be coming up to take this out. If we push to the downside, we got this low, first low near this huge 1 hour fair value gap. Then if we get below that, that means that this area is inverted. And this area already has been inverted. But now we got this bullish fair value gap. And even though we got this bullish fair value gap, this tapped the high and is trying to use this as an inverted area. But if we cannot, we will probably fail inside of here. And then the 2 should happen within that range. I'm not going to draw it because I don't want to have a lot of stuff. But just know between the 1230 candle and the 1430 candle, this is a bullish fair value gap. If we trade below it, it will be inverted and the 2 should happen there. Then the 3, oops. If we get our 2-3 move, right? Our 2-3 move, there is this candle series is an order block, and this one is too. So I'm going to assume that we at least challenge this last candle right here. It's the last down candle we got before this move up. So I'm going to assume that we challenge this, and that one because it's in line with the low of this 1 hour fair value gap. So that kind of brings me into context with the low. And if we get that, that means that we could possibly get a bounce from the 3-4 bounce. But
Cause I hate to interrupt
Yeah.
you, but I'm gonna jump off. I'm finna run in here and holler at my uncle, and I'll
Okay.
catch up with y'all later.
All right.
Peace, y'all.
All right. So if we can't get the bounce at the 3-4 and the 4 fails, it's failing at the midpoint, and then we get the sell off for the 4-5, and we challenge these 2 areas of liquidity and this previous week low. On the upside note, our 0 to 1 to the upside pushes us above these highs. And then there's actually probably an order block on the lower time frame right here. Let's look. Yep, right here. So we'll probably make our high right around there. So let's say here. Then we use on the 1 to 2 retracement. If we can hold around here, we hold above the monthly. Our 3-4, you can see it right here too. There's a fair value gap right here. I'm not going to draw it because I'm going to keep it clean a little bit, but we can see there's an order block as well. So our 3-4 makes our high. I'm sorry, our 2-3 makes our high probably somewhere within that range. And you also got the gap, weekly opening gap right here. Weekly opening gap is here. So we'll probably likely come and use this, fail or push from there. And that'll be where we get the rejection for the 3. And if we want to keep pushing higher, we're going to need to hold inside of this gap. Our 3-4 shouldn't push out of this gap. And then our 4-5 move should hold to take us above the weekly high. Whether we take out the high of the week, I'm not sure. But if we are going to push up higher, it should look something along these lines. And this is our high of week right near. We got pretty much equal high near this previous week high. So I don't need to put it there, but just know our weekly high is up here above this previous week high, right below the previous week high. So this is the VIX. I'll drop this in the chat. Now, get into the indices. We're going to be looking at Dow first. Dow pushed up, then Dow sold off. Dow was the weakest out of the pairs this week. It's been kind of just really smaller ranges, but it's still been doing its thing, right? We've been in between the 0 to 1 to the upside and 0 to 1 on the downside, but that's it. We haven't taken out any. We took out these highs, but then we traded back in the range, right? We traded into this fair value gap, but then we rejected back near the opening price. So honestly, nothing's really changed on Dow, really. Nothing's really changed. We just expanded it slightly. So for the most part, all the targets that I'm looking for on Dow are still kind of the same. I think the upside target gives us a little more room push higher, but that's about it for the upside target. Downside target is still pretty much the same. Not a lot. Like I'm not even going to change this at all because our 0 to 1 should take out the most recent high. That'll take the weekly. If we do push down, this is an order block. So ours, if we do push down on the 0 to 1, our 1-2 retracement should push back up near this candle. That's actually an order block now. Then there should be a fair value gap somewhere around there. Our 2 should fail. If we get the 2-3 move should take us down below these lows or at these lows. And then the 3-4 retracement, we may get a bounce from 3-4 retracement if we don't want to take this no further. And then previous week low is taken out. And then we trade down into this. There's a 4-hour fair value gap on the upside. This is our weekly low so far right here. That move for the 3-4 takes us down and through that, or we get it on the 2-3. So this is pretty much the same for the downside. Not much different. Now, the move to the upside, slight change. We just expanded a little higher. But now we got our weekly high here. This is our high. We want to look out for small range on. I mean, it's not small technically. but it's tight price action. So, I mean, you can catch a great move out of this. So, but overall, it didn't move a lot as far as percentage wise on Dow. So that's our weekly high. This our weekly low. We got a previous day low here. And then this was today's low. So this is a previous day low. So you can see not a huge price movement on Dow. And then this swing low right here, you want to watch this one. This swing low will be one of our first downside targets if we do start to sell off on Dow. And this swing low is our sell side liquidity. And then again, if we get our 0 to 1 to the upside, first target is we try to take out this high. Then once we get inside it or above this high, we need to watch to see if we want to hold around the low of the 4-hour fair value gap at 49,686, 49,868. Then if we get above that, we want to watch out to see if we can get above this 49,686, and we want to we're going to probably take out the high at 1 on the 2-3 move, and then the 3-4 move should give us a retracement to hold back at or around probably this candle. This is going to be an order block, and we hold worst case scenario near the low of this fair value gap. So we may get, price try to hold around there again before we expand higher. And then at least we come to push up near the 4-hour fair value gap high. I like the 3 or the 5 to give us a retracement. So, and then if we do keep pushing up, you can see overall targets of a new all-time high on Dow. But Dow was the last one to make an all-time high. I thought ES was gonna make another one, but we didn't. And NASDAQ is the furthest away from making an all-time high. So this is what I'm liking for Dow. This all makes sense?
Corey, quick question. Did you say the 4-5 leg was a better move, or would you still take the second leg?
Yeah. I'm just saying that the 4-5 and the 4-5 and the 2-3, those may come down and test the low of this 4-hour fair value gap. Both of those could do that. Because once we get above the weekly high right here, it's gonna once we get above the weekly high, if we're gonna keep pushing up, we're gonna need to see price hold around here. And
Right, yeah.
And if it's gonna hold right here, it may hold and make another high at the 1, and then come down and hold at the 2 on the 1-2 move. And then the 2-3 could go ahead and push us up near the midpoint. And then once we get near the midpoint, that 3-4 move could also come down and try to give us a move to the back to the low too. But if it's gonna hold, it'll look like let me see if I can find one on here. What this will look like for you. Inverted fair value gap is basically what it'll be. Inverted fair value gap, right? Where is the best one on this chart? Real quick. I see some, but not how I want to explain it. Let's look at okay. Hmm, this is an example, but it's just not clean because they just tore through that one. But mm, 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 mm. Nothing's standing out on my eyeballs. Let me look at I'll find one that's clean that I can show you. I think it's one on today's chart actually. Let me see. All right. This is not a fair value gap, but it works the same way, right? This this one has one on here. I'm gonna come back. I'm gonna come back. I'm gonna say that for the last. And we can go over that. Okay.
Okay. Thank you, Corey.
Yeah, that'll be better. I want to get through this real quick. So did I put Dow in there? Yeah, Dow's in there. All right. So now we got NASDAQ. This is after we do NASDAQ, I can go over because it'll be better to do it the other way. All right. So NASDAQ is in a small range too. I mean, a bigger range than it's in a bigger range than Dow, but we basically kind of did the same thing, right? We took the previous week low, which you can see right here. We took the previous week low, but then we traded into this new day opening gap from a few weeks ago and then we held, right? That's where we got our low. You see where we got our one? We bounced right around our one. That's why I was saying this gives this a great example of if we get a bounce, it's probably going to happen at the one or the three, right? And you can see this bounce happened pretty much in between the one and the three, right? You could have looked around either of those, but that's why, okay, we got our 0 to 1, then we pushed up, right? We didn't really get a clean downside setup, right? We pushed up first, then we sold off. So if you see something like that, you still interpret it just a different way, right? You interpret it the same, you're looking for the same kind of stuff, but you just interpret it how you enter the trade because even here on the 0 to 1, you got to understand we can still be getting the sell-off at the one. And that's basically where this happened from, right? This high right here was almost in line with the one, right? And in this case, we just sold off, right? So just the same way that I always explain to y'all that, okay, if we do get a high, a 0 to 1, so this is our 0 to 1 right here. And if we get the 0 to 1 and we sell off and we reject, the first thing it's going to do is take out the last low it made. And we made the last low right here. Then it's going to make a new low. That's what this new low is right here, right? And then once we made this new low, if it's going to keep going down, we should get a retracement. So this would have been our 0 to 1 to the upside. This would have been our new move to the downside. So here is our 0 to 1 here, from here to here. Here's our 1, 2, our 1, 2 right here. And every time I tell you, if it's going to sell lower, there should be a fair value gap in there. There's your fair value gap right there. That's where we get our 1-2 retracement. Now it's like, okay, is it going to keep selling off at the 2? Okay, it's selling off at the 2. This is our 2-3 move, right? So our 2-3 move should take us below this high first, and then whatever the next high. Our 2-3 does that. 2-3 takes us below this high. And then if we're gonna bounce, it's gonna be at our 1 or our 3 or our 5. Because now, okay, this just made our 3 low right here. Here is a 2-3-4 retracement, right? Again, in between the 2-3, there should be a fair value gap. Our 2-3 should be a fair value gap inside of there somewhere. So whenever we get our 3-4 retracement, if the 3-4 move is going to reject, should reject inside of a fair value gap. That takes us below the low we just made and to some point of interest down below. There's a inverted fair value gap right here. There's a gap, new day opening gap over here that we don't have on this chart because we took everything off. But then that's where we should get our 5. And if we don't bounce at the 3, we don't bounce at the 1, another probability is to bounce at the 5. That's exactly what we did to go higher. And then the cycle just repeats itself over. Now we finished the downside move. Now it's a whole move to the upside to look at the same thing. So that's basically what we just did over here, right? We did a whole move down. Now we're looking at how we respond up. So this will be similar, right? I think our 0 to 1 pushes us down near the weekly. We get our move to the downside near, and it holds near the daily weekly open. If we get a retracement initially, I think it will hold down below the daily opening price. Let's pull this out a little bit. This is going to be our main area, so that's 53. This price gap still in play. We're still using this price gap and that daily opening gap. Still got a little usage out of this. So if we do sell off, this is where I'm thinking we're going to go. Right? This is our new weekly low right here. And then if we get a bounce, right? Okay, so if we get a bounce at the 1-2 and we fail, I think it's going to happen around this candle, this last candle for the day. And then if we reject, our 2-3 takes us below this low. And this order block near the high of this gap, which is right here, it already pushed us up higher. I think that keeps us from going any lower. And then if we do get our 3-4 retracement, I think that will fail somewhere just slightly above the weekly opening price. And then if we don't continue to go higher, we push back into this gap, new day opening gap, price gap as well. Or we just go ahead and take out the low for the week, because I do think it's a cause that for us to continue pretty hard lower, especially after the news that we got today at FOMC. So it's a chance that we could go a lot lower than this. And today's move back to the upside a little bit might get stalled out. So I'm looking at bounces at the 3 or the 5 at the highest probability. And if we don't, we take out the weekly low, and then we push down to actually there's a case that I can see us going down and take out this yearly low and this previous month low. I don't want to put it out there yet, but I just want to kind of see what does the unemployment claims look like on Thursday, and then PCE could really tank this if it goes now, just like it could bring us up higher if it does want to push up higher. So there's some different scenarios that we can definitely see that comes out of the rest of this week, because that PCE data plus what we got from FOMC plus the unemployment could really take us through one of these upside or downside moves, downside areas. So keep an eye out on that. Watch out for that stuff, okay? Then we got swing high, right? Swing low. That would that'll be one of the first targets to the downside. I forgot to add that onto the chart, but that's going to be this swing low. And I didn't add this other low over here, but this is going to be our 2 areas of liquidity that we need to look out for over here. And the upside looks like similar to this. You can see this is now this is a good example, Trees, right? So we near the low, 4-hour low. This series is down close candle. This is what I mean when I'm referring to an order block putting in near each one of these levels if we're gonna go higher, right? This traded up near the midpoint of this fair value gap, but then we sold off, and we pretty much most of that held near the low of this price at 24,944, right? And now if we start to push higher, it's going to want to use this candle to get through this midpoint, right? And then you might see an order block placed right here. This is like what it looks like to invert a fair value gap, right? Typically, you're going to see order blocks at each one of these levels, high, middle, and low, and sometimes even the quarter points inside, right near the midpoint. And then you'll see price trade above this, use this to go higher, make another order block, trade above that, use that to go higher, make another order block until it completely inverts it. This is like a key sign that something can get inverted when you start to see order blocks either at the level, below the level, or right above the level, right? This one is an order block right below it, right? It's not using it because it didn't get back. It's not using this one. This one's right below it. It didn't use it, but you can see, right? We traded above this, pushed the high. Price is coming back down into it. We haven't gone lower than this yet. So you can look out for that one to see if we want to use that to go lower, right? If we keep pushing up, the one candle series that you want to look out for is this one right here, because if we keep pushing up, that's the next one that could potentially be used as an order block to go higher. So if you're looking for trades and you thinking that it could go up and keep going up higher, if you see us get above this candle, it's a high probability that if we're going to go higher, we won't ever get back below this candle during that time frame that you're trading with. And so that could be like a stop loss. This is a large one in this particular case, but if you got a smaller one you could use for a different kind of setup, that's what you would be looking for though still. It's a real obvious key signature that something's about to get inverted when you start seeing stuff like that. Whether it happens, it might not, but if you see something like that, that's definitely what you want to look for. So again, we got the 0 to 1 to the upside. The 0 to 1 takes us at or above this high. And just like I said before, if we get at or above this high, the 1-2 retraces and stays inside of this candle. And then we use that to take us higher on the 2-3 move. The 2-3 takes us at or above this little small candle right here on the lower time frame. This might be, I think this is an order block right here. Let's look at 15-minute. Probably see it right around there in 15 minutes. So right here, there's a little candle, up candle right there. That's our order block that I was referring to. Then this 1-2 move becomes an order block near the midpoint. That's what the 3-4 move to the downside used to stay up and above to keep going higher. And then our 4-5 takes us at or near the yearly opening price. Rejections. I can't really say where I think the rejections would come from if on this move, because if we go higher, that means we're responding positively to the unemployment or the PCE move. And if that's the case, then that's taking us out of this range probably. So best case, I'll say the 3 or the 5 that we get the retracement if we're going to retrace. Hope that makes sense. And then you can see right above us, we got the previous week high. And we got the previous day high here. And we got the monthly. So we got a lot of areas of liquidity and a lot of magnetic levels, right? The magnetic levels are your yearly. I even added in the 3 month. That's going to be your quarterly opening. In this case, this is the yearly opening as well. So that's why it's looking like that. And you got your monthly. So you got a lot of areas it could be pulling to as far as where it could be looking to go to on this. That makes sense? I hope so.
Yeah.
Yes, this is good.
Tracking.
Tracking.
Yes, this is good.
Aria, she has no idea what she's looking at.
Hey, she tracking.
Hey, Corey, you need to create some sessions for kids
Oh,
so we can get REL trading.
I'll try. I'm gonna get ChatGPT to do it for me.
I know, right?
I'm gonna get ChatGPT to do it. All right. So yes, same situation as the rest. We pushed up, held inside of this fair value gap, sold off 0, 1, 1, 2, 2, 3, 3, 4, 4, 5, all the way below this low, right? It didn't happen like cleanly like we thought it would, where we got our 0, 1 to go immediately down here. That's okay. If you looking at this, you already know that this still could be a rejection area as well, because it is a bearish area, right? That's a bearish fair value gap. This can come off. Here is our weekly opening gap. We still gonna bring that out. Let me expand that. We took out the previous week low, and we took out this daily high. And now this is our weekly low. It took some trades on this. This was area of liquidity that got taken out. This got taken out. Get all this off. This got taken out here too. So now for our liquidity, this is our high of the day, high of the week. So weekly high. We got a swing low from yesterday here. So that's going to be our first downside target if we get a sell off. So that's our first area of sell side liquidity right there. We got another one, swing low from this morning. It's going to be second level of liquidity that we definitely know if they're going to sell off, they want that. They want it. Right? That's our nice little range, right? So you can see we took out these equal lows right here and we're trading. You can, again, all right, just like before. So this is a potential order block. If we get above this, right? You can see price stalling inside of the 4-hour fair value gap, which lines up with the quarterly and yearly opening prices, right? So everything depends on how we act above these levels. Because if we turn bullish above this, that's when we know, all right, you see us get above this, we could probably take some buys in this area above these candles right here. And then we can start targeting the middle, the monthly opening, the 4-hour fair value gap high. And then there's some targets up higher. And then, for the downside, again, let's start with the downside, right? So we closed here. We already can see where our downside targets could possibly take us a 0 to 1. Worst case scenario, we just go automatically down to this near this new week opening gap, which we tap the yearly opening price. There will be a fair value gap in the middle of this somewhere, and that's where we get our 1-2 retracement to push to and fill, if that's going to be the case. This candle, like we said before, will act as an order block, plus this is an inverted fair value gap. I'm not going to draw it, but this area will be sensitive when we have overlapping areas. So we have the new week opening gap. We have an inverted fair value gap. We have an order block, and we got the weekly. So this area is a strong bullish area, and it will be very sensitive. So if we do come down in there, 2, 3, hold up somewhere around the 1, or we push just low near the bottom of this inverted fair value gap. So that's what I'm looking at for the 3. There's this old new week opening gap, which also lines up with that same area of the price, which we could also maybe even trade down into. That was my target for the sale I took on Tuesday, which was supposed to be the low of this gap. I sold off from around here, down to the middle on Tuesday. Sorry. Then likely areas to bounce on this is the 1 and the 3, and maybe the 5 too, but 1 to 3 for sure. If we get down here, then let's say that the 5 holds us up here. Although depending on how news trades, we could go ahead and try to take out this low for the week. This is our yearly low. If we do push lower, we come after the yearly low. That would be a target. And our bounce highest probability is a 2 or the 3. The 5 is a high probability area too, but if you down there and it's pushed us all the way down there, there's a high probability that we may want to go after the low of the week. So we'll just have to watch how the news reacts to price. All right. Then upside, right? We took out the highs that we had pending. So now we look at this last high that we got. This is the only high that we got within our recent range of price. Again, if we take that out on the 0 to 1 move, we take out this high, we trade near the monthly. If we're gonna hold below that on the 1-2 retracement, we hold within these 2 candle ranges. Maybe worst case, we come down to about right here. Then we get our 2-3, push us above the high we made and above the monthly maybe, or the 1, and we stall around the midpoint of the upper quadrant. And then the 4 either holds at the monthly or we push back down into this order block now, because that'll clearly be an order block at that point. And if we get higher on this move, our 4 to 5 pushes us up and above the 4-hour fair value gap high, with likely sell-off areas at 3 and 5. And we see how we want to play it after that, because things could have changed based on how we reacted to the news. So that is, let's pull this out a little more. Am I missing anything? No. No. All right, let's drop ES. And that is all, folks. Let me do one last thing. I'm gonna go and see if I can find a quick example.
Hey, Corey,
Yep,
you said you took a trade on S&P today. What did you get in at?
this is the trade for
Oh,
this.
okay. What did you buy in at?
So the context of this trade was that we pushed up overnight
Mm-hmm.
and we had liquidity from London low. This was London high. We swept again, right? And
Yeah.
when we swept, at the same time we swept, the VIX had news. We had news come out, and the news pushed the market down initially on ES. It pushed the VIX up on VIX. We took the low here on ES. We took the high on VIX. Then VIX pushed up on the 9:30 open. It left a gap. And I'll show you that.
I see the gap.
The
I got.
9:30 gap on VIX,
Mm-hmm.
which was right here. At the same time, we made this 9:30 gap right here on VIX right here. We failed to go higher. and we pushed below the gap. We pushed back in the gap. And then once we pushed back in the gap, that was lining up with us holding this low. And that's the entry for the trade. So once we rejected this gap and sold off, that was my entry to say, hey, this is going to go higher
Right.
on this. And then to get confirmation, once Vic took this low out, went on this candle, I'm seeing Vic ES take out this high, right?
Mm-hmm.
Then VIX get to another low right here, right? That's lining up with ES taking out this high. So I'm knowing I can stay in this trade because VIX is taking out lows simultaneously. ES is taking out highs. And just to add icing on the cake, same thing happening on NQ, right? Same setup on NQ, just different numbers, right?
Okay. Yeah, I got you. Cause I got in at 60, 68.87, and I bought in at 4 units at 68.87,
Uh-huh.
and I sold 2 units at 69.08, and the other two at 69.11.
That's a good setup.
Right.
That's real good. That's almost the same trade that I took.
Okay.
I got
Oh,
in at 68.77 and
mhm.
60.75.
Okay. So that's what I do here. I'll be looking for the rate every day. If it ain't no rate, I don't take the trade.
Mm-hmm. Mm-hmm.
So that's
Yep.
that's what
It's
I
a good
learned
setup.
so far.
That's
Yeah.
I'm gonna try to show you um a gap getting inverted. If I can find one real quick. Clean one. Now I see some, but I don't see a clean one yet. And I kind of want to show you on the lower time frame. And the reason why I want to show you on a lower time frame is because you see a lot of you see a lot of little different, like minute things when you're looking at it. Because you'll see the price actually responding to the area. Um, let's look at gold. I think gold might be good look. It's been choppy. Okay, here it is right here. Okay, so this fair value gap right here is a higher time frame bearish fair value gap, right? That got turned into a bullish point of interest, right? So we were looking at this. This is on the 1 hour, right? This is probably like a daily fair value gap right here. That this orange box is right here. But on the 1 hour, you can see, okay, we sold off the first time when we came to it right here. We tried to come to it right here, but we sold off right here. But the first time we got back inside of it, right before we got inside of it, let me zoom in so you can see it a little better. You can see this down candle right here that tried to sell off, once we got above it, you can kind of see price start closing above it, it never came back to it, right? But here you got your three quadrants. You got your low, middle, and high. Then in between that, you got the middle quadrant, middle lower quadrant, and the upper quadrant right here. So right around here, halfway in between is here. If we look at this candle right here, this stopped almost halfway in between this midpoint and the low, this down series of candle. So when it rejected, right, it traded from the pretty much the midpoint, which is right around here, to the low. But when it got to the low, that's where price stopped, right? The price stopped right here. And even with this wick, right? If you look at this wick, it didn't really go any lower than this candle. So this got used as an order block. And then once we traded above these two candles, which is right around this high right here, you can see price held above that candle. And this little candle became an order block once we traded above here on this candle. So we made some more highs, we traded down into that candle, order block / fair value gap, and then we push higher, right? Then the next thing that happened is once we made a new high, these two candles it's an order block at the middle of the fair value gap. If we were going to sell off, because at this point it's still bearish, right? We should have been selling off here, right around here, right around here, and here. So anytime we get to those points, you're going to see us try to sell off, right? We tried to sell off here. We tried to sell off here. We tried to sell off here again. But every time we tried to sell off, you'll notice that these candles start to get used. The candles that should have sold us off, they start to get used to make us go higher, right? So now we've traded down into this candle. We made a low in that candle. We push higher. Once we push higher, we traded down to this candle. There's a small fair value gap set up, bullish order block / fair value gap set up right here, just like it was one over here. Then once we traded down, we made the low, right? Once we made the low, we traded up above this candle. Price try to come back down into this candle again. It makes a low right here. It trades up to the high. So, and then once we got to the high, you see the first time we get a sell-off is near the high, right? This candle, if it was going to go higher, if this was going to go higher, we would have used this as an order block. We never got back above this candle, right? So we sold off. But even with us selling off, you'll see the same thing happen in the opposite direction, right? So on the lower time frame, everything I just described here is also happening right here in the opposite direction, right? So once it decides that it's ready to go lower, right, we push down. This blue candle right here becomes an order block to the downside. We take out a low. We make a new low, right? We push up. There's a order block to the downside. There's a small fair value gap. That's where we make a high. Then once we make this high, what do we do again? We sell off. The last low we made, we take it out right here. Then price push back up. Once we make this low, price push back up. This series of candles right here is our order block. There's a fair value gap right there inside of there. We trade just above it, but we hold pretty much the range of the order block. We stall out, then finally we sell off. The low that we made is our target, which is right here, right? So once we decide to sell off, we sweep that low, trade down lower. This gets reused, this same order block. We don't get lower than the low of this range, which is now you can consider this as your stop loss. If you're taking this trade, you still taking a buy from here. We buying now from the low of the fair value gap. And now this is the last confirmation that this is probably going to get inverted, right? We got order block on this little candle right here. We trade above it. We get a fair value gap. Now we got the fair value gap. We make a new high. Price come down into the fair value gap. We don't even come into this order block. We just leave it and we make a new high. Once we make a new high, this down series candle, which is at the middle of this fair value gap, that's our order block. This is our fair value gap. We make the high, price come back down into it. We trade up higher. We make a new high. This is our order block. There's another one right here. The high of the order block is right here. We trade above that. We make a new high. We don't have the fair value gap in this case, and then this doesn't do a deep run into this because you got this over here. Soon as we make a new high, this down series candle is an order block. And this is at the high of the fair value gap. Now we completely out of it, right? And as soon as we get out of it, it just uses this to buy because now it's completely flipped. It ain't bearish no more. It's bullish. And now, after we take out this high, the next high we start taking out are these highs over here. And then we start all the way over. Now we got a new fair value gap. And that's confirmation right here because now we got a new fair value gap. And this fair value gap took out these highs. So this is the one that you want to look at for this move right here. That pushes down, sell off, because now we got a whole new run up. Right? That makes sense?
Yes,
Make
yes.
perfect sense. Make perfect sense.
All right. So
So basically, we looking for higher highs and higher lows. It seems
inside of
It's
inside, yeah,
inside of a range, inside of a fair value gap,
right.
you should always get a high inside of a fair value gap or a low inside of a fair value gap. And you'll see it happen inside of a fair value gap. But if you drop down to some lower time frames, you'll see that high also probably line up with an order block.
Mm-hmm.
You will always see, like, having a fair value gap, you always have an order block as
Order
well.
block, yeah.
It's
Yeah, I've been paying
they
attention.
come in a package. They're a package deal.
Yeah, I've
And
been paying attention to that.
yeah, they're a package deal. You may not see it on the time frame you looking at, but if you start going
Drop
down
down,
to the
yeah.
lower time frame, you always gonna see it, right?
Mm-hmm.
And sometimes, so that you will know that it's a fair value gap in an order block, you'll see something that look like this right here, right? And sometimes when I'm looking at the charts, I'll say, yeah, this is probably an order block, but just not on this time frame. If you look at this on a lower time frame, there's an order block right there. But when you look at it from the fair value gap perspective, this is an order block near the middle quadrant of the
right. I
so
got you.
you should expect something to happen right there, which it did right here, right? Then this candle right here, this last blue candle right here, this is a bearish order block near the midpoint of the fair value gap and near the upper quadrant. You should expect something to happen, right? Even if it ain't what you think, there will be a reaction to that area, right? You see, we're near the high, right? We're near the high. There's an order block on the lower time frame and a fair value gap near that area, right? That's why we get this, right? And this is repeated, right? This is repeated all the time. And then the same way you look at the fair value gap, you can treat the weekly opening gaps. You can treat the the new day opening gaps, it's the same
Price
concept.
gaps. Yeah, I got you.
All of that is the same concept. You're gonna see the same thing happen. It's just gonna be a different logic applied to it. Like, it'll be a fair value gap and a new day opening gap. New day opening gap, a weekly opening gap. Inverted fair value gap, same kind of stuff is gonna happen over and over. You just gotta find out where you are. It's like having a map and then having the guide next to it with all the symbols to tell you like, oh, okay, this is a road. If it looked like this is a elevation when it looked like this, like this is a river. You just got to know, all right, when I see this, I need to turn this way or turn that way. You know what I mean?
Mm-hmm.
Yeah, it's
Oh yeah,
exactly.
make perfect sense, brother. I got you.
And like once you break it, once you start to see it, like it's like you can't unsee this,
I
man.
see it. You can't unsee it, yeah.
You can't unsee it. Like it turns into like I'm a nerd, but like I'm a cool nerd, right? But this turns me into like super nerd, right? Because it's like if I was like really like obsessive, I could find a trade all day and all night. And because I see stuff all the time, so it's like, and there's a side of me that could literally trade 24/7 because I see so many things, and I know I can go on the chart and just, if I look and see where I am in reference to where I am in one of these points of interest, I can be like 10 minutes later, I could be pressing a button and getting in a trade. But I have to stop myself from doing that.
I feel you.
So, all right, y'all. I'm gonna try to get this up tonight. And I'll drop everything in there. Shout out to myself. I'm now funded 1.65 million. And
Congratulations, brother.
Congratulations. Let me
I'm
hold
about to
something.
be
Congratulations.
I'm about to be done with, I'm done with 6 accounts now, and I'm about to be done with the 7th one, and then I'm about to start getting some payouts after that. I got about 5 more to finish after that. 2 of them I started on already. The other 3 I haven't started, but then I'm gonna go ahead and knock those out too. So that'll put me at 3.65. Then we gonna go. Then I'm gonna go ahead and go and get Top Step. I'm gonna go ahead and knock Top Step out, and I'm gonna max out those accounts too. And then after I do that, I'm gonna go to FTMO. I'm gonna go on back to them and get those accounts from them, and I'm gonna max out on them too. So we about to run it up, man.
Run it up.
We about to run it up.
Run it up.
We are about to run it up, man. So yeah, and I think who next on this call? I think
am.
Treese. No, I think Treese closer.
I would have had it had I not did something stupid on, what was it, Friday? Yeah, it was Friday. Oh man. Or was it? No, it was Monday. Oh man. I would have had it. And then I did something again stupid.
That's all right.
But I'm almost there. I'm almost there.
We ain't gonna do nothing stupid no more the rest of this week. We gonna
No.
script.
No.
We gonna stick to script.
And then sometimes I jump in, like the mover make the move that I'm looking for, but I jump in too early.
Yeah. Wait for your confirmation. Just wait for your confirmation. Anna, then it'll be Anna after that. I think Anna, you got your 50K you almost done, right?
Yeah, almost.
See? What you looking like? You halfway the last time I talked to you.
Yeah, it was half, but I didn't trade in Top Step since this week. It was
Uh-huh.
Apex only. So yesterday I did in Apex, today I did in Apex.
So you traded a 300K account today.
Yeah, yeah.
Okay, okay. So, all
That's
right,
why
all
I
right,
took that now bigger lot. But
all
all
right.
good. Uh-huh.
You got to get used to the size.
Uh-huh.
You got to get used to the size. So, okay, okay. So it's Trees, then you. I'm waiting. I'm waiting,
Yeah.
waiting. I'm gonna jump for joy when you get done, Anna.
Oh my God.
I'm gonna have a party for you.
I know.
Yeah. All right, y'all. I'm gonna hop off and get this old stuff put up in the group, and I will see y'all in the chat and in the charts, and then I'll see you guys on Sunday.
Mhm.
Peace
All
out.
right, have a good one, everybody.
Good
Later.
night.
Good
Have
night.
a good one. Thanks.